Hey folks, Dan Frio here, the rate update. Today is September 27th, 2021. We come back, we're going to talk about Fed, housing, and if and when rates go up, how much would that affect your mortgage payment if you're still looking to buy a house? We're going to cover all that next, so don't go away. So lately the news is just the Fed, the Fed, the Fed. Well, the Fed just came out and said, they see inflation starting to taper back, or ease. I'll take the taper word out of there, starting to ease. Even with that, what's their thoughts on tapering? We're going to go over with Steve Leisman. Well, let's have them discuss it right now. And when you come back, we're going to go over more information about the Fed and what's that doing to the housing market and interest rates. So don't go away.
Let's go to Steve Leisman, who has some breaking news regarding the Fed. We'll come back to our conversation in just a moment. Steve, what do you have?
Scott, thanks very much. New York Fed President John Williams, speaking to the Economic Club, says that tapering may soon be warranted, assuming the economy continues to improve, picking up the line from the Federal Reserve statement and aligning himself with comments made by Fed Chair Jay Powell. He expects inflation 2% next year, sees it moderating now even. And the recovery, he says, shows solid momentum, but a full recovery will take time. Growth, you guys are going to be talking about that, 5.5% to 6% this year. Strong, faster in the first half, slower in the second half. Labor market recovery impaired by the COVID surge, he tells us, and there's still a long way to go for maximum employment. So Scotty's one of the top guys there. He votes at these FOMC meetings. He's on board with a taper soon, assuming the economy continues to improve. Back to you.
The other part of the equation is, okay, taper soon. What happens if rates start to really take off to the upside, Steve? What is the impact going to be on the next move that the Fed may think it has to make, and when?
I think the Fed will see higher rates as exerting something of a brake on the economy, and in some cases, sort of offsetting the need for the Fed to act, assuming that it's concerned about an inflation problem. I think a lot of it's going to tell, look, you have the economy should have higher rates given that it is normalizing. That some of that process is going to be part of just normalizing rates, normalizing the economy. There could be some inflation concern in there. The Fed's going to look closely, Scott, at why rates are rising. Is there a term premium aspect to it? Is there an inflation premium? Is there a growth premium?
Yeah, I mean, and you would, as you say, you want them to rise. It would be proof that the economy is, in your words, normalizing, or the Fed's word, whoever first used that. Steve, thank you very much.
Okay, so I hope you got something out of that. It's saying basically what Steve Leisman is saying is federal officials have come out and said even if inflation starts to cool, and some of them think inflation will be back into the 2% range next year, they're still like, we're going to start cutting a lot of the stimulus that's out there right now. So let me show you where I'm getting all this data. And then I also want to go over with the Federal Reserve, some of the news that just came out about them just momentarily to give, so you guys get an idea, what is the Fed, okay? So just Fed officials say they see a pullback in stimulus even if inflation starts cooling, okay? Now the Federal Reserve, basically what it is there's 18 members, 12 have voting rights, okay? And then there's the chairman. They have a lot of control, okay? It's the Jackson Hole meeting. They're out there, all the bankers throughout the world are out there, all big executives are out there and everything. So they know what's going on. Well, some of them just got their hand caught in the cookie jar. And let me just preface it by saying, it's usually not often that you see two Federal Reserve members retire at the same time and amid scrutiny over investment trades. Again, what they did isn't deemed illegal by the Fed or the government's governance of it. But if you and I did it, I can almost assure you we'd be escorted out of our offices in an orange jumpsuit with a bunch of chains on. So that's just that. So I'll keep you up to date on what's going on with the Fed, what's going on with the inflation, bond purchases, and so forth. But let's really dig into some of the highlights of today. And one of the biggest things that I'm even noticing is the clickbait on the housing crash. Okay, let me get one thing clear. Can the housing market crash? Absolutely. Is it going to crash because of similar events that took place between 2006 and 8 and so forth? No. Okay. There might be a pullback or something like that because of just a huge inflation or push up in housing prices. But underwriting standards are really tight right now. You can't get 100% financing unless you're doing USDA or VA. You have to have skin in the game. There is no, you need a 620 credit score to even get approved for a conventional loan. You need a 580 and then 600 credit score case in most areas when it comes to FHA. So that's a lot different than where we were in 2006. You can get a 580 credit score in 2006, 100% financing with really no job. It was called as stated income, stated assets. So you just put down you worked at such and such a place and you made such and such income. It was good enough. We're doing the loans. Okay, that is long gone. Okay, so you have very good standards in underwriting and you have house appreciation that's up. So you have people that had skin in the game when they bought it and they had a nice appreciation run up. Okay, so that's that. You haven't seen interest rates jump up, or and also at this time we are not coming off of a bunch of negative AM adjustable rates and teaser loans and all this other stuff. That was a big proponent of why the market crashed back when, because you had people on these adjustable rates at 3-4% that adjusted to 8%. So it basically doubled their house payments, in the matter of 12 months to 24 months, and then all the cards come tumbling down. So that's there, guys. There isn't going to be a crash unless it's just something completely unforeseen. So the next thing I want to talk about is, with rates going up, and we know they're going up, how much is it really going to affect your payments if you were looking to buy a house? So I'm going to put this link down below. And I found it today, and it basically goes over, and it should be pretty current. Let's find this. I've been working on this a little bit. July of 2021. So it's fairly new. The cost of owning a 3-bedroom home in every state. So I broke it down and I went through it, and I took out a couple different factors in this, or fractions of this. I took a bottom tier of housing, and I'll show you where I got that. I went to West Virginia. West by God, Virginia. That is my hometown where I grew up. I think we were all the way at the bottom, unfortunately. You can buy a house for $125,000. Okay. 20% down. I'm going to debunk some of these things and give you the factual numbers on this. And the property tax effective rate is 0.55. It's really cheap. Then we're again, Texas, $220,000 with a property factor or tax factor of 1.69%. and so forth. Then we have Colorado and Wisconsin. So what I did is I went over here and said, okay, let's look at the prices that we're looking at on all these. So in West Virginia, and there's a point here I'm trying to explain to you, rates at 3%, at 3.5%, and 4%. If rates go all the way to 4%, are you priced out of the market? So in West Virginia, the average house is $125,500. You don't need 20% down. So we're going to completely debunk that. You can get away with as much as 3% down. Okay. That's going to save you. If you went 20% down, you're looking at $24,000. You go with our first time home buyer program, you're getting in with $3,700. Okay. Now the rate, today's rate's 3. The property factor, as I stated before, is 0.55. Oh, shoot. Hold on. I got to go a little bit different than this. This doesn't allow me to do it that way. It's fractions, which is really weird. But let's go to 0.55. All right. Homeowners insurance. Let's make that 600. That's probably comparable. Your house payment would be total house payment to buy a $125,000 house, $713. Okay. $713. What if the rate went to 3.5? Is that going to double my payments? Triple my payments? Oh, that's a down payment. I'm sorry. 3%. Let's go to 3.5. So we're looking at 713. Rate goes to 3.5. 746, up $30. How about if it goes skyrockets all the way to 4%? Remember, we started out at 714. 780. Okay. So it goes up $65. All right. Is that going to, if your payment went to 780, are you not going to be able to afford a house? Okay, so that's one realm of it. So now let's take the other extreme. In Hawaii, the average home is $740,000. Well, we have programs with 5% down at that at that purchase price. Okay. We have a 30-year term. The rate's 3%. Their property tax factor is 0.74. So we're going to increase that up to 0.74. And we're going to say the homeowner's insurance on this one is at least $1,000. Okay. So put your payment at $39.60. Let's write that down. $39.60. And now let's take this and go, what would be my rate at 3.5? $41.53. Okay, so $100, $100. Okay, 4%. It's going to go crazy at 4%. $43.52. Okay, all the way up to that, you're looking at $300 and about a little over $300 increase. Yes, it's a $300 increase I don't want. But would it cause you not to buy a home if they went all the way up to that amount? I can't tell you yes or no because you live in that area. You know what the rents are. You know how much you're paying. The one thing I'd like in this one comment or one website that I was in, let's go back to it so I can go over some of this information for you. Should you prepare for a housing crash? Well, let's say you're not looking to sell. Who aren't looking to sell? What should you do? Well, all the experts in here tell you refinance. Try to capture these low rates and see if you can save any money. Refinance now. Okay, there it is right there. Or at least look into it. Okay, if you're looking to sell or you're looking to sell and buy, huge difference. Okay, if you're just looking to sell, get out, retire, move into a retirement community or whatever, God bless you. You're selling at a high end. Get out. If you're looking to sell and move up, that's tough but just think of it this way. You're going to sell on the high end and you're going to buy on the high end. Okay, so if this one, if your current home starts to decrease in value, probably the house you're going to buy is going to decrease in value. So is it a 6 or a half dozen the other? Maybe, but only you can tell that. Basically, what I'm trying to do is say, guys, rates are going to go to 4. They're probably going to go to 5 one of these days. The word FOMO comes into mind because I follow cryptocurrency a lot. Fear of missing out. Okay, don't let that control your whole life. Okay, you're missing out on selling your house at the top end. What are you going to do? Move into another house? Maybe. Is it a good time to do that? Only you know. You have another child. You need more room. You're in a 1-bedroom studio and you need a 3-bedroom. Okay, your life circumstances are going to put you in that area. What I'm trying to do is debunk the housing crash and also debunk saying, if the rates go up, it's going to price everybody else out of houses. It's not, guys. It's not that extreme as ever the media makes it look. Okay, so now let's go over what's going on with the mortgage-backed securities market and mortgage rates. I just had a young lady on the phone a little bit ago, and I'm like, we're locking you in because this continues to deteriorate. Okay, and look at it. You can look down at the bottom. So why people follow me right here? Why do we watch this? Well, the mortgage-backed securities market right here, MBSs, are the biggest component. This is a bond that trades on Wall Street. This is the biggest piece of the puzzle in your mortgage rate, okay? About a week and a half ago, this number right here was almost 101.4. That's where I thought we would be trading because I didn't think the Fed was going to step in and really stir the pot like they're doing right now. They're basically all in now saying, we're going to taper. We're going to taper. Honestly, guys, I was on the sidelines. I didn't think they were going to come out till at least October, November, start the tapering maybe December, January, February. It would conclude mid to late year next year. But they came out and announced it. So I missed that one, but I locked everybody. I have a lock request out last Wednesday to all my loan officers saying, guys, lock them in. We were right here. Okay? That's where we were right there. So if you're with us, and you've been with us, you missed this bump, which is great for you. Let me explain how this works. This number right here is the price, what's happening to the price of the mortgage-backed security. It's not the yield. You're concerned with the yield because why? The yield is your mortgage rate. the rate, okay, rate of return or whatever. So on a bond, when you follow the price and the yield have an inverse relationship. So what I mean by that is this number right here is going down. So the price of the bond is going down. It's increasing the yield of the bond. In this particular bond, the yield is your mortgage rate. That's why we're so concerned about this number going so far down, because it's driving up mortgage rates. Okay, so that's where we are right now. And it's been on a steady decline basically since the Fed announced last week that, yeah, we're probably going to taper. There's a good chance of us tapering. So that's one piece of the puzzle that we're monitoring. Economic calendar for this week, it's full, guys. We have a lot of data here that came out today, durable goods orders and so forth. But what we want to focus in on is what's going on with employment, what's going on with inflation, and what's going on at the Fed. Okay, the Federal Reserve, Fed Chairman Powell is speaking at 9 a.m. on Tuesday. He's also going to talk again at 10:45 on Wednesday. He is going to get drilled on inflation, tapering, the jobs numbers, and also why Fed officials are starting to retire early. Okay, so this might throw a little curveball into the market because even the Fed now is under scrutiny for different things. And then you start having the gross domestic products. That gives you, gross domestic purchasing pricing indexes and so forth. So some of this data that's coming out later in the week is going to be what we watch for inflation numbers. But Thursday's numbers are the unemployment or continued jobless claims and initial jobless claims. There was a surprise last week, and I don't know if it's a Delta variant or not, but we're going to meticulously monitor these to see how the jobless rates are going. So now let's see what's going on with mortgage rates. And I haven't posted this in a couple days, so you might see some adjustments here. These are mortgage rates as of Friday's close, okay? And this is done by Black Knight. They surveyed mortgage lenders all over the country. We reply and with all of our 30-year rates. So these are not my rates. These are the national averages. You have 30-year conforming, jumbo, FHA, and VA. And here's the rate, okay? That is the national average. If you got better than that, God bless you. If you got higher than that, there might be a reason. If you're getting, all I'm trying to do is say, here's where the rates are. The one thing I want you guys to focus on too, if you're looking to refinance and not using us, please look at your loan estimate. When we start a mortgage for an applicant, we have to send you what's called a loan estimate, and it breaks down all the numbers. If you have a loan estimate, please do me a favor. Go to page 2 at the top left, and it's going to give you all the lender fees. If you see fees of $700, $800, $900, $1,000, $2,000, $3,000, $4,000, whatever, send that loan estimate to me. Let's review it together. If I can beat it, maybe I can earn your business. If I can't beat it, God bless you and take what you have. But the reason why I do the mortgage rate every day is just to give you guys an idea where you should be. I've had some people come in and say, hey, I got a VA loan with 2.25 with no points. Kind of hard to believe, but God bless you. I'm not calling you a liar. But so now let's move over here. This is the 1 day, 7 day, and 4 week delta. Delta means change. So over the past day, mortgage rates went up 5 basis points. In the last week, 10 basis points. In the last month, 8 basis points. That's on the top end, the conforming. What is a basis point? Well, 5 basis points means 0.05. Okay, all these are up because if they were down, they'd have little kind of quotes around them or parentheses around them. So rates are all up. I still find this, and I'm not doubting Black Knight because I post this every day. I know rates went up a little bit more than this because we've had a catastrophic 4 or 5 days trading days. And I'm going to give you those numbers right here. This is basically what's going on with mortgage-backed security prices. And that's a big move, guys. That's a big move. So I'm not saying these rates are wrong or not. We'll continue to monitor them all week to see if there's maybe a bigger adjustment tomorrow or so forth. But I want to make sure you guys are in the know. So that's it for right now, guys. If we can be of any help to you, please reach out to us. Love to help you. How do you find out more about me and my team? Well, the easiest way to do that is go to therateupdate.com. This is going to pop up. My name won't pop up there. It'll just say call, schedule an appointment, or apply now. obviously you can apply now and that'll get you on your way. If you would, or if you're like, I got questions, I want to talk to somebody, I need help, I want your opinion, give us a call, 844-775-LOAN. Or what a lot of people do, schedule an appointment. Click here, schedule a day and time that's available to you. Let us know if you'd like to do it by phone or by Zoom. And then we'll be at that day, at that time, we'll be talking with you to answer any and all questions that you have. So God bless, guys. Thanks for watching. I'll see you tomorrow. Bye-bye.